Good day, everyone, and welcome to ACA Software Solutions and Commodity Technology Advisory's Why Commodity Analytics is the Next Big Thing webinar. I'm Michael Schwartz, Chief Marketing Officer with ACA Software Solutions, and I'll be joined today by Patrick Reams, Founder and Managing Partner with ComTech Advisory. Just a couple of housekeeping items before we start. To ask a question, use the question box at the lower right side of the control panel. Other attendees will not be able to see your questions, and we'll address questions at the end of the webinar. We are recording the webinar today, and it'll be available on ACA's website. Now let's get started and take a look at the agenda for today. So we're going to look at commodity market technology spending trends, the technology solution trends under those market trends, why commodity analytics now, and how Commodity Analytics Cloud, which is ACA's offering, enables fact-based decision-making. With that, let me introduce Patrick Reams, as I mentioned, Founder and Managing Partner of Commodity Technology Advisory. Patrick possesses a deep understanding of the energy and commodities markets developed through hands-on experience and managerial oversight of energy and commodity operations, including exploration, production, gathering, plant, and pipeline operations. Patrick's an acknowledged expert in market analysis and advisory. He's a frequent speaker at industry conferences and events, has published numerous articles in industry publications, and is often quoted expert in news stories. He's the co-author of the book Selecting and Implementing Energy Trading, Transaction, and Risk Management Software, a primer, and Trends in Energy Trading, Transaction, and Risk Management Software, second edition. And with that, let me turn it over to Patrick.
Thanks, Michael. I appreciate it, and I appreciate ACA inviting me to participate in their presentation today. If we can jump to the first slide of my agenda there. Quickly, the things we're going to talk about today is a bit of a macro market view around the commodity markets and the underlying tech spending. We'll talk about the regulations that are impacting both the marketplace and the systems used by those market participants. We'll talk a little bit about the adoption of cloud solutions and the growing impact these cloud solutions have on the marketplace. This next one, Return to Grow Your Own. We'll actually talk a little bit about the return to custom solutions or hybrid approach to those solutions. We'll also talk about the changing landscape of the tech providers and the buyers of those technologies. And then touching on the theme of the presentation, the webinar today, we'll talk about analytics being a must-have in this marketplace. So jumping to the first slide in our deck, let's talk a little bit about the macro markets. As most on this call know, most of the commodities have come off their lows from earlier this year, but they do continue to trade well below their highs of 2014. Though some have seen some recovery, such as soybeans, crude, zinc. I think aluminum's come up quite a bit. There is still a number of commodities that continue to be near their lows. Until there is a sustained recovery, IT budgets are going to continue to be constrained and scrutinized as companies in this marketplace seek to control their costs and maintain their profitability. Additionally, we are seeing regulatory issues continuing to create additional complexities across the market, particularly in Europe, as new regulations are still emerging and are unsettled, and the technology requirements to address those have yet to be fully developed and deployed. So over the last 18 months, it's really been a bit of a difficult market for both the buyers and providers of technology. With increasing complexity in the marketplace that are facing commodity traders, merchants, and producers. These guys need to improve their technology capabilities, but they don't really have the funds right now to spend on complete system upgrades or replacements. As such, many of the vendors in the marketplace are seeing lower revenues and are really having to fight hard for every deal that's out there. And there really is a bit of a downward pressure on prices in this marketplace. It is becoming, in effect, a buyer's market for new technology solutions. Let's jump to slide 2. So the raft of regulations impacting the commodity markets, the alphabet soup, including Dodd-Frank, REMIT, EMIR, MiFID II, and all the emerging equivalents around the globe, do require additional technology capabilities to address, particularly in the areas of reporting, data retention, data management, market enterprise risk management, market centralization, that is the exchanges and the clearing capabilities, and then also capital adequacy requirements that we see. So as regulators continue to push trading onto exchanges and bilateral markets, trying to bring additional visibility to the trading in these marketplaces, these commodity traders and the markets themselves do require more and more sophisticated technology in terms of exchange connections, data management, and improved analytics. The reporting requirements are also a particular concern in this marketplace. Slide 3, please. With regulation, it brings more risk, such as potential for fines and penalties and reputation risks if you fall out of compliance, and more costs, including additional staff and business processes. It also requires new tech and reporting tools to meet the requirements of these emerging regulatory reporting and compliance measures. However, it's not just the regulators. We are also seeing increasing scrutiny in the marketplace from stakeholders. They're increasing their expectations of performance. From the auditors, wanting to make sure that you remain in compliance. Credit agencies are particularly concerned. And also in particular, shareholders want to ensure these companies can adequately manage their businesses in this difficult marketplace and accurately forecast their results. This includes areas and systems that have previously not been in the limelight, such as credit systems and particularly treasury management these days. So bottom line, the regulators and the shareholders their expectations are dictating that data is retained longer and it can be retrieved and analyzed quickly to address inquiries and any investigations that may arise. Slide 4. Let's return to the tech markets. We are seeing that while these contradicting influences, that is cost cutting, but also the need for more and more sophisticated technologies are an issue, we're also seeing the buyers are becoming more cautious in their approach to buying technology. With a number of high-profile project failures gaining attention recently through the grapevines of the industry, buyers are more closely examining their vendor track records and are looking for a reliable partner with the best fit products that can meet their needs. Buying cycles are becoming longer as more time and effort is spent on the due diligence prior to the purchase. This forces many companies into a situation where their outdated systems are becoming more tenuous to use, particularly given the emerging geopolitical issues such as Brexit and the impacts that these geopolitical developments have on the marketplace. As such, many buyers are looking more towards non-traditional solutions to meet their needs for lower costs, quicker to implement solutions such as cloud or hosted products. Others, as they're searching for their perfect solution or finding the best fit for them, may be a hybrid approach that involves multiple niche or specialized vendor products with homegrown components. Next. So let's turn to cloud. Again, as the title says, cloudy days. It is becoming cloudy as more companies are turning to cloud solutions. We are seeing significant increased adoption of these products, and while some are multi-tenanted solutions, that is, multiple users using the same front end, we are seeing the greatest adoption around hosted solutions. That is, your own install on a server that is being maintained by your vendor. Either way, these approaches do offer generally lower upfront costs, including lower initial license fees, lower internal IT, and equipment costs. But as experience with these solutions continues to increase, we are seeing many of the barriers of adoption starting to fall away. While buyers are still concerned with security, the ability to integrate, and the loss of control of their applications, that is the ability to customize or make changes to that application, the upfront cost advantages and track record of success that is being seen in the use of these systems by others is starting to sway the market in favor of this approach. In all, we do expect this trend of adoption of these cloud-based solutions to continue with the cloud-based market growing at a pace greater than 15% per year versus what we see as about 3% per year for the traditionally installed systems in the marketplace. Next. Turning back towards the build experience that we saw, about a decade ago, a number of companies had undertaken significant builds of custom solutions. These projects were extremely complex, they were expensive and time-consuming, and a large number of these projects were effectively failures. They were over budget, they didn't meet the needs of the users, and they were very difficult to maintain over time. Based on this experience, we saw the pendulum start to swing the other way, with very few custom builds in the marketplace and increasing adoption of large-scale vendor products. Now, given the difficulties that some of the large multinationals that trade across multiple commodity classes have had in finding systems that meet the entirety of their needs, we are seeing a hybrid approach starting to emerge. That is, buying niche solutions or specialized solutions that can meet the needs of specific complex commodities or specific business units, and then wrapping those up in an enterprise-scale custom-developed infrastructure for consolidations, reporting, forecasting, and analysis. Even beyond this hybrid approach, we're starting to see interest in full custom builds starting to emerge again, with a number of market participants saying that they're willing to consider a full custom solution at the highest that it's been for a number of years. Based on our latest research, more than a third of the marketplace would definitely consider building if there wasn't a product available to meet their needs. Nonetheless, based on the experience of the past with high costs and long lead time to build, these issues continue to be of great concern and are preventing many companies from pursuing custom builds. Next. So if we look now at what's happening given these trends in the marketplace on the vendors that are providing these technologies, we have seen over the last number of years a number of acquisitions by some of the larger vendors in the marketplace, and we are continuing to see the market growth. Nonetheless, based upon our most recent market sizing studies, we do see that the revenues of the top 6 vendors in the marketplace have fallen over the last couple of years. In fact, from just 2014, the top 6 vendors controlled 71% of the revenue of the marketplace, and that has fallen down to 65% in 2015. Now, a lot of this is attributable to what may be the near demise of TriplePoint in the marketplace. While they still are in business and they still are maintaining systems, the market growth that TriplePoint had over the last several years is definitely gone, and they are shrinking in terms of revenues. So being that they are one of the top 6 companies, that top-tier revenue share is shrinking. We're also seeing that the top of the marketplace has shrunk as well. Banks, utilities, and others have left commodity trading or have scaled down their operations across the board fairly considerably. Again, and we are seeing the reduced budgets, and we're seeing the general cost cutting as commodity prices have fallen and collapsed over the last 18 months. We're also seeing many of the large established vendors have really been late to the developments in the cloud, and they're effectively trying to do catch-up and provide some type of cloud solution. But a lot of the smaller vendors that have been in the cloud for quite a while have been capturing those revenues that otherwise might have gone to those large vendors. We're also seeing the emergence of the ERP vendors in the marketplace, those companies that have been primarily dealing with the large-scale producers and merchants in the marketplace, now starting to come in with CTRM-like capabilities and are taking market share. Nonetheless, the market is very wide right now. We've got 90 vendors that we track that provide some level of CTRM in the marketplace. And so a lot of these vendors are now starting to take chunks of revenue out of the marketplace that historically would have gone to the largest vendors. So we are seeing a very diverse and growing marketplace in terms of those that provide the technologies, and the depth of capability of some of these niche vendors is creating pressures for some of the larger scale vendors. So we're seeing now those top 6 and some of the others below them really starting to have to move down market to capture market share and sustain their growth. In the process, a lot of the large vendors are starting to shrink the size of their solutions to meet a certain price point. This again does have implications for the revenues that they're gaining in the marketplace, but it does offer opportunities for customers in the marketplace to find a better price for these systems that are available. Next. So in terms of analytics and it becoming a must-have, we are seeing the competing pressures of reducing IT spend while meeting increasing regulatory mandates. We are also seeing increasing market risks and the need to maintain bottom line performance in a difficult marketplace. And this really does point to the fact that companies do need to improve their analytics capabilities, particularly in the area of optimization, predictive analytics, risk metrics, credit risk. All of these types of analytics are becoming more key to surviving in a difficult marketplace with constrained budgets. Based upon the most recent vendor perception report that we did, we released just earlier this year, we asked the respondents to rank what they consider to be critical capabilities as they look at new systems. What capabilities do they need in those systems to address the current market conditions? In this last report, 50% of the respondents did rank comprehensive analytics as a critical or important capability for their company. That's a number that is increased over time and has particularly jumped up within this last report. So I think the marketplace does recognize, given the complexities and given the issues that they're facing, comprehensive analytics is becoming much more important to their organization. In line with that, the data management tools are also becoming must-have capabilities. As the amount of data coming into organizations as they reach out into new markets, or as markets grow more complex, as regulators demand more and more information and data from those organizations, data management and the analytics tools that operate on top of those truly are becoming must-haves. Now, ultimately, how much of this will be ultimately met by the ETRM, CTRM vendors is yet to be seen. But we are seeing a growing trend where companies are viewing those systems merely as transaction management and are starting to look at outside analytical tools to give them a greater breadth of capability, not only in analytics, but in terms of visualizations and report development. So these companies are starting to look at CTRM systems as kind of a source system for a greater analytics capability that exists outside of that CTRM architecture. Next. So just to wrap it up here and turn it back over to Michael, I think I'm about out of time. We are seeing that the collapse of commodity prices have driven a lot of the big picture. It's squeezed profit out of many of the commodity trading entities, and the regulatory environment is adding additional complexity, the need to grow capabilities in light of these lower prices. So this does lead to cost cutting, a lengthening of the buying cycle as customers are becoming more diligent in trying to find the best fit at the lowest price. It is driving a number of companies to consider cloud solutions or hybridized solutions. And it's also definitely increasing the interest in analytics, maintaining the current CTRM architecture, but adding additional capabilities on top of that, which does help to alleviate the cost pressures in terms of replacing CTRM systems to gain improved analytics. So despite the glum that we see in the marketplace and the uncertainty generated by the mass media in terms of commodity prices and the doom and gloom around those, the overall tech market so far has remained fairly active with bright spots in certain market segments. However, as these larger CTRM vendors that are well known to the marketplace are seeing increasing pressures on their own revenues, that we are seeing that they are moving down market and are trying to create solutions that are at a lower price and probably stripped down in terms of capabilities. It is a very competitive marketplace out there with more than 90 vendors now, all vying for a piece of that 70% of the market that's been held by those top tier vendors. So competition truly is very fierce and is pushing prices down. Bottom line for tech buyers and tech users, there's no singular solution or approach or vendor in the marketplace. It's just more requirements, more options that need to be addressed with lower budgets in this current market condition that we see. In order to achieve the types of solutions you need to operate effectively in this marketplace, you really do need to think about technology innovation and be open to new technology approaches as they arise, whether these be cloud-based, hybridized solutions, or even a custom build to some degree to wrap existing capabilities. So with that, I'm going to turn it back over to Michael. And again, I appreciate the opportunity to participate, and I think if we have questions, we'll answer those later in the presentation. Michael?
Thank you, Patrick. And that's a perfect lead-in to what I'm going to cover. So let me just start with 10 seconds on my bio. Chief Marketing Officer at ACA Software Solutions. Have been here for 3 years. Prior to ACA, I was the Chief Marketing Officer at TriplePoint Technology. Was there for 10 years as it grew from a small company to one of the largest vendors. Prior to that, Chief Marketing Officer at 2 other technology companies. So fourth go around as Chief Marketing Officer, very good view of what it takes to supply value to customers from a enterprise software perspective, and started my career at IBM. You see the slide here. I'm going to do one slide on ACA just as background, and then we'll get into the meat of the presentation. You can see that first line, global leader in on-premise and cloud-served smart commodity management solutions. Couple of points as I go through. You'll see ACA solutions are cloud-based, and Patrick mentioned that's a trend, but we also do on-premise. A lot of large customers still want on-premise, so we make solutions available in both ways. But the key word there is smart. And when I get to the solutions, you'll see ACA has leading ETRM and CTRM, which is a lot of what Patrick discussed. But over the last 18 months, has been investing heavily in analytics, and we'll get through that. And that's really what this presentation is about. Been in business for 12 years, over 300 employees around the globe. You can see offices in North America, APAC, and Europe. From an investor standpoint, and I'm going to just stop here for a second, Silver Lake, GP Group, and Nexus. What's interesting from an ACA perspective is Silver Lake's the premier technology investor in the world. Companies like Alibaba, Dell, all the leading technology companies are backed by Silver Lake. About 3 years ago, they chose to invest in ACA and back ACA, and they saw what we were doing from a solution standpoint and value to customers. GP Group, you probably haven't heard of. They're based out of Asia, over $3 billion in management. But what I find interesting about GP Group is they are the leading commodity investor. They actually started way back as race traders, and now they're a commodity investor. So you have the leading technology investor and the leading commodity investor backing ACA, and the Nexus would cross both of those. From customers, they cross energy, ag, metals, and bulk, and you'll see some of the leading companies like an EDF or Cargill, to to mid-sized companies, you'll see renewable energy groups, so renewables, you see COFCO there. So both mid-sized and large leading companies across energy, ags, metals, and bulk. And now moving down to the solutions. Insight Commodity Management is the name for our ETRM and CTRM platform. We absolutely believe it has the best functionality in the market. And moving below that to Commodity Analytics Cloud, that's the analytics solution that we've investing in over the last 18 months and has had great reception in the market since we announced it 6 months ago. Just for clarity, this webinar moving forward is about Commodity Analytics Cloud. It's not about our ETRM and CTRM platform. So we're going to focus on analytics and what that means and what we've done. But would be obviously happy to talk to anyone offline about our ETRM and CTRM platforms and where they fit. And one of the points, I'll make it throughout the presentation, but I'll make it here. Commodity Analytics Cloud is not tied to ACA's ETRM and CTRM platform. One of the core tenets, we believe, of analytics is it has to be able to work cross systems. So it obviously does work with ACA's solutions, but it works with other types of solutions like ERP and Treasury and competitive ETRM and CTRM. Next slide, Lisa. So Patrick and ComTech Advisory is the leading advisory in CTRM and ETRM commodity management. I pulled out a study here from that Accenture, it was really a survey that Accenture and Microsoft did, and this is digital trends. So this is just digital in oil and gas. But I thought it had some key points, and they noted 5 key insights, right? The first one Patrick covered a lot. Short-term focus is on lowering costs. Margins are under a lot of pressure in companies, and companies said longer term they will move back to creating value and growing revenue. For digital specifically, the survey said investment continues and is expected to increase. So even though they're cutting costs in certain places and technology investments, for digital solutions, they are investing now. So if you're not investing, if you're sitting on the sideline, you are most likely falling behind your peers and competitors. Third one, digital is enabling companies to reduce costs and better manage operations. But one of the things they called out was through things like advanced analytics. Companies are investing in analytics, and it came out again in the 4th insight. You know, companies need to improve their capabilities, including a maturity in analytics. So 2 out of the 5 insights were about analytics, along with an increased investment in digital. And then the 5th one, which Patrick also found in CTRM and ETRM, is an increased use of cloud to unlock value in digital. And you'll see as we go through ACA's solution, obviously, you know, the name is Commodity Analytics Cloud, so it's cloud and it's analytics. So it's hitting on the basic tenets that this survey found in oil and gas. Lisa, next slide. So why is analytics and fact-based decision-making a challenge? And we do find when we speak to people, it is a challenge. In many commodity market problems are unique and require complex logic to get to the answer. You know, many companies have teams of quants, have spent a lot, but you know, companies have already invested in ERP, CTRMs, ETRMs, Treasury, CRM, accounting. A lot have invested in business intelligence solutions, have business intelligence groups. But when we talk to them, they're still relying on spreadsheets. The analytics solution of choice is spreadsheets. And this is not because these companies are unsophisticated or want to use spreadsheets. It's what they're getting forced to use, and we'll get to the reasons why. Existing options are expensive and time-consuming to implement. You know, we hear from companies, we've already spent so much, do we have to spend significant sums again? You know, do I customize an ERP or CTRM so it fits what I want? We get the same with business intelligence solutions, right? Most of them, or all of them, are generic platforms, which means writing all the algorithms and customizing to get it to fit your business. And it ends up being more expensive and less effective. And that's why people end up back in spreadsheets. To make meaningful and timely decisions, large volumes of data need to be integrated from multiple sources and processed. What technology choices do I have? And we'll see this over and over. And again, one of the reasons spreadsheets become the integration solution is when you're doing analytics or decision support, almost always the information is sitting in multiple systems. Historically, the BI group would create a data warehouse. But when you do a data warehouse, the traditional way, it presupposes the issues and the problems and the decisions that you're trying to make, and only a small subset of the data is loaded into the data warehouse. And every time there's a new issue, as a business user, you end up going to IT or the analytics group, and you're on a 3-month wait list to get it. Again, the reason people end up in spreadsheets. Next slide, please. So let's talk about the ACA solution. And you can see in the title there, Commodity Analytics Cloud. That is the name of our analytics solution that we've introduced to the market about 6 months ago, although we've been investing in it for over 18 months now. Here are some of the core principles or tenets of the solution, right? Connect data from multiple sources. As I said, it obviously works with ACA's eTrend and cTrend, but it's designed to pull data from competitive eTrend and cTrends. We find that companies do have multiple eTrends and cTrends, whether it's different desks, different geographies, but it's just the real world, the way it works. It works with internal applications and external sources of data, and does pull information from spreadsheets also. Compute. The name is, we built in our commodity intelligence engine, but it's prepackaged commodity business specific algorithms. And you'll see as I go through this, we use an app paradigm. So not a generic platform, but we build apps for specific business issues, high value business issues that need to be solved. And we build the algorithm. So you can think App Store type paradigm where you're using just the apps you need. And it's built on an in-memory data grid. One of those things is data is growing exponentially. It's exploding in companies or the data they use outside companies. And you need to be able to handle that data in a fast way. And that's what an in-memory data grid does. And then crystallize. And this is the app paradigm I was talking about. Apps deliver commodity-specific visualizations, handling specific problems. And also, a lot of our customers and prospects have already invested in BI tools like Tableau and Click, and those are complementary, right? So we come with our own visualization, but if that's your preference, it's integrated, you can use that. We're not asking you to undo anything you've done or not use something you like. We're trying to put the power of the commodity intelligence engine in front of it and being able to easily connect the data sources. Next slide, Lisa. So here are key product features. And some of these I've mentioned as I've gone, so I'm not going to go through in detail the commodity intelligence engine, which has algorithms, models, and other types of analysis like optimization. Apps, I talked about an app paradigm where we're taking on very specific high-value business issues, and I have more examples on the next slide, so I'll leave that. Monitors is, as I said, we have our own GUI that crystallizes monitors, brings alerts, and lets you really focus on exceptions or what you need to focus on, and it's configurable by the user. Self-service. This is one of the key tenets of analytics going forward, right? Historically, analytics has been the domain of IT and BI groups, and business users would struggle and really end up using spreadsheets. The principle here is the democratization of analytics and making it available to user groups. And then it's built to share with teammates. Data ecosystem, I talked about that a few times, using all the data, both internal and external, and being able to bring it in And it's not an old school data warehouse. It's modern technology where it's easy to bring in new data and just use the data that you need for your specific app. So very easy, and you'll see some of that as I go through it. Both connectors and data preparation are how the data is coming into the system. Speed, as I mentioned, an in-memory data grid, that, millions of data entities in seconds can be processed. And then mobile, again, our customers, as we work with them, the workforce is becoming more and more mobile. People are used to doing everything, at least outside of work, on their phones, and that'll continue to grow throughout enterprises. In Commodity Analytics Cloud was built with what we call mobile-first design. Next slide, Lisa. So here's just some examples of apps, and these are examples. And I should say, as we go through this, if in your company you have a specific business problem that you think would be ripe for this type of solution, talk to us. If you believe and we believe it's market-based, it's not unique to your company, it's a good chance we would build an app for it. So if you look at the columns here, commodity trading, position consolidation is, basic as that sounds, we find in many companies it's done outside the ETRM or CTRM because they do have multiple ETRMs and CTRMs. Certain of their books are not in their system. They're doing certain adjustments outside for different deals. And then P&L explained is P&L attribution is kind of the industry term. P&L explained is the app name for ACA. So we have a position consolidation and P&L explained. I'm not going to go through all these. I'm just going to pull out a few to point at, and you can read them here. Under energy, you can see a flash P&L or intraday P&L that we find many of our customers were looking for. Again, under agriculture, a lot of the same things as far as position consolidation, a lot of the same things as commodity trading, P&L explained. Under manufacturing, commodity procurement or procurement around raw materials and ingredients and tracking it and managing it is a big issue. Being able to get coverage on a timely basis, being able to do analysis around forecast and plan and actual as market prices move on commodities and what's been priced and unpriced, really, really hard for manufacturers and absolutely done in these large spreadsheets, which I would bet a lot has errors in it. It's not timely. And then if I look at bulk commodity sites and move along here, the other one I wanted to mention is that last bullet there, stockyard optimization. And really what I find interesting there, there's so much press about Internet of Things or IoT. That is actually an IoT app that we've built for port optimization, stockyard optimization, where we're taking the sensor data from the big equipment that's moving things around a stockyard or a port, reading that into our app and optimizing against the plan. And that'll grow out from an app perspective, right? You have all this data. We talked about an explosion of data. How are you going to leverage that data? And the app paradigm is a perfect way to do it. All right, so I mentioned P&L explained here. You can see it in commodity trading, see it in energy, see it in agriculture. I'm going to go through a use case now real briefly just so you get a better feel for an app, and I'm going to do P&L attribution. As I said, the name of the app is P&L explained. So why is it hard? Why, when we start talking to our customers, are they doing P&L attribution in spreadsheets? And they are. Well, one of the main reasons, and this goes across analytics in general, but this is a perfect use case, is the data is spread out amongst different systems. And you'll see when I get to the, where we integrate the data, the different types of systems, but that's just the way it works at these companies. And then the interdependencies between factors, right? There's a lot of factors that go into the attribution, and we'll go through that a little bit. But there's a lot of interdependencies when prices change, and parsing that is complex. And then, so it makes it difficult if you're pulling data from multiple systems with a lot of factors and a complexity in parsing it. And most people are doing P&L attribution on a daily basis. It makes it really hard to gather and analyze the data, every day. And what happens is a lot of the change is put into an unexplained bucket. Right? And that inhibits decision making. It inhibits the use of what you're doing. And let me just back up. We have an ETRM and CTRM, and as I said, I came from a competitive vendor that I spent 10 years at. And most of the ETRM and CTRM vendors have P&L attribution modules. But we find out in the real world, they're not being used. And it's not being used for the reasons above, mainly bullet one, that all the data is not in their system. And analytics, when you try to do it in one of these systems, and same could be said for ERP, really any kind of transaction system, they're not meant to be analytics, and they work with the data in their own system. And that's just not the way analytics works. Next slide, Lisa. So I'm just going to do a couple of screenshots here to give you a flavor for the solution, and then if there's interest, we can certainly move forward offline. So this is what we call collections. It's where data flows in, right? And this is, again, P&L explained. So you can see in this case, there's manual adjustments in this use case, right, which is they had some really complex trades where the pricing wasn't done in their ETRM. They're holding it outside the ETRM, and it would normally be added in a spreadsheet after they did whatever they did in the ETRM. You can see here they're using multiple ETRMs. You can see ETRM 1 and 2. We took out the names. But and that's because of, again, it could be different commodity books or desks. It could be different geographies. A lot of times use different systems. And in this case, they're doing their FX trades in the treasury system and holding it there. So they have these data sources that need to be merged, and in the ACA solution, it's merged here in collections. They all just come in like this and automatically merged. And we can get to the technology another time. Next slide, Lisa. So if you look at this is where the attributions are happening. And if you look at where I've circled, where it says attribution bucket, those are, and it's a long, long, long list. We absolutely believe we have the most detail of any solution available, right? So that list goes, but those are the attribution buckets that are available. And again, it would keep going down. And then there's a 5-tier hierarchy that's user-defined to how you want to roll up, right? So we can go down to the lowest level, the trade level, and I'll show you a little bit of that. But then you can roll it up in any way you want to start analyzing, reviewing, reporting. Here we started with entity, which are futures, FX, physical, to event type, and you can see the different event types from cancellation to FX changes, and then event, and then sub-event, like cancellation of a future, or, and then here we called it sub-event too. That's all user-defined. But tremendous flexibility from analysis and roll-up and drill down. Next slide, Lisa. Okay, so here we start to get into a little bit of the detail. If you look at the left side, that's just a quick summary of what the change was in my P&L. So you can see it's 4.68 million, and this we were doing in Australian dollars. So quickly know the change. And you can see here, this is a monthly, but the system stores different time frames. So it could be daily, use monthly, so there was a bit more of a change and easier to see. But it stores multiple different time frames. In here, I've already drilled a little bit. So I started, with my physicals. I went to amendments. So I'll click through on amendments, and you can see, my price changes, my estimates that change, my grades, my Inco location, quantity. Really go through all the different amendments in detail and quickly understand what's driving my P&L change. And then, Lisa, if you go to the next slide. And here I've jumped really to the detail. So this is, one level of detail below that graph I was showing you. So if you look at the attribution group 1 column, it's not circled here, but it's all the physical, and then attribution group 2, it's all the amendments. And you can see if I go to all the way to the left where it's circled, it's a tree structure. You can go through all your attribution groups if you wanted to really go through the detail. And then where I circled reference number, that's a quick drill to the actual trade. So you can, get to all the detail you want or roll it up in that hierarchical structure to the highest level. But it gives you tremendous power. And the structure I have here is all, you can move these columns, delete columns. If you went to the right, there's a whole lot more. You could have every column. You can sort on any column, filter. So tremendous flexibility as you want to look at the detail too. And then Lisa, next slide. So let me bring it back up to a high level about, commodity analytics cloud. We're seeing the investment in analytics. What are the key points? You need to be able to blend data from internal and external sources. That's absolutely a key principle of analytics. And it's the reason I don't think anyone wants to be doing their analytics in spreadsheets. I think everyone knows spreadsheets end up with errors because you end up with these really large multi-tab spreadsheets. They're difficult to maintain. No one went to school looking to key things into Excel, but it's really what people are left with today when they look at their options. So a key point is you need to blend data from internal and external sources easily, including pulling data out of spreadsheets. So it's not take what's in your spreadsheets and put it in some system. Use commodity-specific algorithms and models. The idea that you're going to take a transaction system and try to build it out to do analytics and bring data from other systems is just, in my mind, silly. And even the generic platforms, the VI platforms, trying to make them specific to commodity issues is going to be take more time and be more expensive than using the app paradigm that we're talking about. As bullet 3 says, use specific apps, right? So take on high-value issues and get right at them. And then, I talked about the democratization of analytics, empower users without the reliance on IT or a team of BI specialists. And really, the future, there's an explosion of data. Really believe the winners, going forward for companies are the companies that can harness the data that's available to them and then be able to use it in a way to make timely, data-driven, fact-based decisions. That's, at the end of the day, that's going to be the winning point here. And with that, please, if you go to the next slide. Here's and Patrick had his contact. If you didn't get a chance to write down Patrick's contact information, but you want to reach out to Patrick, just send me an email, and I'll forward it on to Patrick. As I mentioned in the opening remarks, we recorded this and it will be available on ACA's website if you think any of your colleagues would want to hear it. And with that, I'm going to open it up to questions. We did have a few questions come in as we were doing this. So let me start with one that was aimed at Patrick. Patrick, you noted some market segments are doing relatively well. Which segments are these, would you say?
Yeah, I think if we look towards some of the traditional markets and specifically the utility markets, they continue to be reliable. I wouldn't say they're necessarily growing in excess of their track record of the past, but I think as we see the reformation of the power markets, both in North America and Europe, with the growth of renewables and increased difficulties around transmission as were brought by those renewables, we see those utility-centric markets continuing to spend at a pace that they've done in the past. We also see a lot of the midstream type of markets, and I'm not specifically speaking midstream energy, although processors are doing reasonably well these days with the feedstock price is low, the natural gas price is low, and whatnot. But then also the food processors and some of the manufacturers, as their feedstock prices come down and the retail prices paid for finished products have been sustained. Those guys are doing pretty well. They don't necessarily have a critical need to spend for technology now, but it is more opportunistic on their part, given that they do have, they're not faced with the same cost pressures that we see, particularly on the producer side of the marketplace.
Thanks, Patrick. And there, I have a couple of questions here, and I think I just covered it. So these were probably written in before, but I'll go through it again just because this comes up a lot. You know, one was around why do I need a commodity-specific tool? Why can't I use, you know, here it specifically said Tableau, but really I'll generalize to a general BI platform. And then there was another one around modifying my ETRM and CTRM. So I'll take them both together. ETRM and CTRM are easy. You're just not going to have all the data you need in those systems to do analytics, and they weren't built as analytic systems. So trying to modify a transaction system to do analytics is just, again, in my mind, and I've been in this segment a long time, it's not going to work. So I just, you know, in my mind, wouldn't even go down that path. I think you're better off just in your spreadsheets if that's really what you're thinking. And, you know, the commodity-specific part versus the general, what we have found with these general platforms is to modify that and to get to really what you're looking to do, you're ending up spending more money than buying, you know, something like Commodity Analytics Cloud, which is purpose-built for the solution. So even though you own it already, you're actually going to spend more money, and there's a good chance you're not going to get to the solution you want. So again, in both cases, you know, it's what makes the commodity industry and all our roles, yours, mine, Patrick, so interesting is it's unique, it's complex, but makes also the analytic solutions different. And then why don't we do one more question? Patrick, there was some stuff around the hybrid approach, and, you know, it's funny, you know, I almost call what we're doing a hybrid approach, which is you have your ETRM, CTRM, and ERP, whatever solutions, and we're saying, you know, you need a commodity analytics layer on top of that. So what we're talking about actually is a, you know, a hybrid approach. We never call it that. But do you have any, you know, figures or anything you want to mention around implementing a hybrid approach, or how many companies are doing it?
Yeah, I can't share any hard numbers necessarily, more anecdotal. We do work with the buyer side of the market quite a lot in terms of helping them understand kind of the lay of the market, available solutions in the marketplace, that type of thing. We don't necessarily do consulting, but we do work with these folks on in terms of kind of a turnkey project. And we have heard from, we have engaged with numerous large-scale, global-scale entities that have tried both of the traditional approaches, that being the traditional vendor-supplied, single vendor-supplied solution to address all their needs. They found that wanting, let's call it. They found that these solutions can't address very specific needs that they have in various geographies or around very complex commodities. So they've swung the other way and have tried to do a full custom build. And that's been, in many cases, a miserable failure. In the best cases, it's been a marginal failure in terms of costs, time delivery, and cost to maintain. So they are looking now at using numerous smaller scale or very specific solutions to address commodities or business units, and then wrapping those with kind of that custom infrastructure. And that custom infrastructure generally more relates to integration. And then also now with an offering like ECHA's got in terms of the Commodity Analytics Cloud, that can displace some of the custom development they've had to do in the past as they develop these hybrid approaches. So in terms of absolute numbers, no, I can't share an absolute number, but I can say that it's definitely a trend that we have seen through direct contact with these buyers, these technology users, and then also in terms of kind of the anecdotal evidence we hear around the marketplace. So I wish I could attach a firm number to it, but at this point I think there is a clear developing trend out there around the hybridized approach.
All right, and with that, I'd like to thank Patrick. Always a learning experience to hear his research and insight. So Patrick, thank you for joining us. You can see my contact information if you have any additional questions. Feel free to reach out, and if I'm not the right person to respond, I will pass it to the right person inside ACA, so you will get a response. And I would like to thank everyone for joining. Thank you.